Fed likely to cut rates again in December amid cooling U.S. job market. The U.S. Federal Reserve is widely expected to lower its benchmark interest rate again in December as signs of weakness continue to emerge in the American labor market, according to a new Reuters poll of economists. Roughly 80% of the 105 economists surveyed, a slight uptick from last month, predicted that the Federal Open Market Committee would opt for another 25 basis point cut at its December 10 meeting, bringing the federal funds rate down to a range of 3.50% to 3.75%. This would mark the Fed's third consecutive quarter-point reduction this year, signaling an increasingly cautious approach to monetary policy amid conflicting economic signal. The general sense is that the labor market still looks relatively weak, and that's one of the key reasons we expect the FOMC to deliver another cut in December, said Abigail Watt, U.S. economists at UBS. But that could change quickly if incoming data dispel the sense of softness. The US job market has shown mixed signs in recent months. Private data indicates that firms have been trimming staff level, while official employment reports have been delayed due to ongoing government shutdown, the longest in US history. A temporary funding bill approved by the Senate this week could, however, allow federal agencies to resume data reporting before the December meeting, providing policymakers with a clearer view of economic conditions. The Fed continues to grapple with inflation pressures that have kept its preferred gauge, the personal consumption expenditure index, above the 22% target for more than 4 years, the longest such stretch since 1995. It could start to affect Fed credibility that inflation has been above target for this long, noted Josh Hurt, senior economist at Vanguard. It's one of those factors people ignore until they suddenly stop ignoring it. Economists surveyed expect the PCE index to average above 2% through 2027, suggesting that persistent price pressures could limit the Fed's room for aggressive rate cut. Economists forecast that the US economy, which grew 3.8% in Q2 and 2.9% in Q3, will slow to just 1.0% in Q4 before stabilizing at around 1.8% annually through 2027, the rate that Fed views as non-inflationary. Unemployment, currently at 4.3%, is projected to inch higher to 4.5% next year, while hiring is expected to remain subdued. The labor market is cooling, yes, but it's not collapsing, said Stephen Johnny, US economists at the Bank of America Securities. We are seeing low hiring but now widespread layoffs. Either December's rate cut isn't guaranteed unless Powell sees more concrete signs of labor market weakness.